Linda Thoresen put down roots in Western Australia 20 years ago.
I'm 5 minutes away from the Dog Beach. It's a very pretty place. I'm 10 minutes from my sister.
When she jumped on the property ladder, she was almost a decade older than the average first home buyer. Now in her 60s, she has $170,000 remaining on her mortgage.
I have decided I won't be retiring next year, I'll be 67 and I could. There will come a time when I go, no, actually I really have had enough of work. I can't see a solution other than having to sell and find somewhere else to live.
A growing number of older Australians are finding themselves in Linda's position.
More people are holding on to employment for longer because of the fact that they've got a significantly higher mortgage liability than I expected to have.
Census data shows over 20 years, the number of Australians aged 55 to 64 who own their home outright has almost halved. Data from a survey of 52,000 people found the number of older Australians with a mortgage who planned to retire but changed their minds doubled in the year to September. The average loan balance in this group was about $190,000, but some exceeded $500,000, and about 3/4 of retirees had less in superannuation than they owed on their mortgage.
There's the knock-on effect of governments then needing to fund pensions for people who, because they've used their super up on the mortgage and are therefore dependent on the pension to survive.
Concerningly, the data also found more than half of retirees expect to sell their property or use their super to pay off their mortgage. There are many things helping to drive this trend, as well as rising house prices and people not being able to afford homes when they're young. Some parents are taking longer to pay down their mortgages because they're helping their kids buy homes too.
The Reserve Bank quite recently said we're not actually really looking at the bank and mum and dad. They should be. This is a really critical factor because if you look at young growing families, a lot of them only got into property because they actually got money from their parents. But it is having an impact now on those parents and it's changing their own retirement plans.
The retirement plans of the current generation of first home buyers are likely to follow suit.
Over the past 4 years, the first home buyers that are 37 years and older has increased by 16%.
We've got this big mortgage burden of higher interest rates for longer, and it's now really punching a hole in the finances of older households that move to retirement, as well as struggling with this question of what younger people do. So it's a real mess.
For now, Linda is grappling with a precarious future.
There's not a whole lot of downsizing to be done. It may be much more a case of less attractive or less quality housing that I will have to consider, and that's emotionally difficult. It could be very good for me to just keep working and having my life as it is.
Staying optimistic despite the tough financial road ahead.